Good evening, friends. This is Avishjan, and today I'll be taking a session. Today's topic is candlestick basics. Now, till now, we have covered accumulation and distribution and SRs with you. So, we have given you the broader picture how the chart appears if you look at it in a zoomed out manner. And today we are going to get into the details of it, what structure is there if you look at the chart in a zoomed in manner. Right. So before we begin, please go through the disclaimer once. All right, we shall begin. So before we begin, I want to know how many of you have gone through any of the books regarding candlesticks, or you are having a knowledge of candlesticks. Okay. All right. So I hope that today's session is going to give you new perspective completely, because we have assimilated a lot of information in just one session today. If you go by the books, then there will be almost 7 to 8 books that kind of information we have included in today's session. All right. So we shall begin now. Firstly, let's talk about the history of the candlesticks. So the Japanese, they began using technical analysis to trade rice in 17th century. So the what, that is the price action, is more important than the why. Why they did this is because they wanted to understand how the price behaved, how the psychology of the trader, it appeared on the price chart. They were not concerned about the news or the events behind it, but they were concerned how the price moved. And based on that, they wanted to take trading decisions. So why they did that? Because all the information is reflected in the price chart itself. You don't need anything additional than that. It's just that with the candlesticks chart, you can take all your trading decisions, and that is what we are going to deliver in this program. So buyers and sellers move markets based on expectations and emotions. So majorly, there are two kind of emotions which are there, which drive the market. I am sure most of you have heard about it. That is the fear and greed. Right. So markets, they fluctuate as a result of order flow. Different players come into the market at different time, and that is how the order flow is there in the market, and that is how the price moves. Now we are going to discuss this order flow particularly more in detail in the later half of this session. So you'll get a more understanding of how the order flows in the market when different players, including even the retailers, how they pitch in, and even the astute traders like the conventional players who have good understanding of the technical analysis, how they trade. All right. So it is always best to know who's sitting on the other side of the screen. If you're buying, then who's selling it to you? Because generally, both people, the buyer and the seller, they consider themselves to be a very good trader. They consider themselves to be very intelligent, and they are taking the right decision. They think of that in that manner. So only one person can be right? So that is why it is important to understand what kind of market players are coming in at different intervals. So the actual price may not reflect the underlying value. It is just the expectation of the market which is being reflected in the price. It may happen that a stock whose book value, or based on the fundamental analysis, its value is, let's say, 100 rupees, but it may not necessarily trade at 100 precisely. Okay, and it fluctuates on a regular basis. So the company's fundamentals, they don't change on the day-to-day basis, but still you get the change in price because of the expectations of the market. And if at all there is no change in the price, then how can a person profit from that, right? So it will not reflect the underlying value majorly. At least 99.99% of the times, it is not going to reflect the actual value of the underlying. So according to the Steve Nissen, the candlestick charting first appeared sometime after 1850. It was previously decided by the Japanese rice trader, but then it was refined further by Western people. They've refined it, and majorly you must have heard about this guy, Steve Nissen. He is a very known person in the trading community, and he has written plenty of books on candlesticks. Now, how many of you have heard about him? All right. So much of the credit for candlestick development and charting goes to the legendary rice trader named Homa from town of Sakata in Japan. He was the first person who developed and refined this traditional way of trading. It is likely that his original ideas were modified and refined over many years of trading, eventually resulting in the system of candlestick charting that we use today. And it is refined further by this guy called Steve Nissen. So this was just a brief about the candlesticks. Now we'll get into the details of it, how it is forming. So in order to create a candlestick chart, you must have a data set that contains open, high, low, and close values for each time period you want to display. Now, as you can see this on the right of this slide, in this picture, we have all that information. We have open, high, low, and close. And based on that, like the order may be open and close, the order may be different. So based on that, we have two kinds of candlesticks. So the hollow or filled portion of the candlestick is called as the body, also referred to as the real body. I'm talking about this particular area. In this case, it is the hollow body, and in this case, it is the filled body, right? Now, there is one difference, one tiny difference here. The open is below the close in hollow body, and the open is above the close in filled body. Okay, so that is just one difference which is there. The long thin lines above and below the body, they represent the high or low range and are called as the shadows, also referred to as wicks or sometimes tails. Can you see this, friends? This area is the upper wick or the upper shadow, and this area is the lower wick or the lower shadow. Similarly, it will be the upper wick and the lower wick. Everyone clear till this point? This is very basic, friends, and we are going to take things from very basic level. Slowly we are going to advance. All right. So how candlestick forms? Firstly, in bullish candlestick, we have the open, then there is a low wick, that is the low, then comes the high, and then close. Now order may be different on the lower time frame, but majorly it is like this. The close is always above the open in a bullish candlestick, and the color of that candle is always green, right? Then comes the bearish candlestick, where the open is above the close. We have high and the low at the same place as in case of bullish candlestick, and this is colored in red. Also, in some charts, you will find that the red candle is depicted in black and the green candle is depicted in white, because this candlestick charting, it appeared around 17th century. So that time that color was not available. So they used to use the black and white kind of color formation. And then between the open and close is the body. And above that, the wicks are represented as the difference between high and close, open and low, and high and open, and close and low, as you can see in this slide. All right, this is how the candlestick forms. Now, the high is marked by the top of the upper shadow and the low by the bottom of the lower shadow. Now, what does that indicate? If the stock closes higher than its opening price, a green candlestick is drawn with the bottom of the body representing the opening price and the top of the body representing the closing price. Now, here, this is a green candlestick. Now, this is the close and this is the open. It is always that the open is below the close in a green candlestick because it indicates buying pressure. The close was above the open. So what happened? Ultimately, the close happened above the open. Okay, so it is a bullish pattern as the stock opened at almost near its low and it closed almost near its high. Can I say that, friends? Ultimately, the close, it decides the market sentiment because when the closing is happening at the top or almost near the high, then the bulls, by the close, they are in charge of that trading session. Right? Just opposite of that will be if the stock closes lower than its opening price, a red candlestick is drawn with the top of the body representing the opening price and bottom of the body representing the closing price. So what we'll have here is the bearish pattern. So in this case, the price, it dropped. The open was here and the close was here. So price fell. Ultimately, the bears took control of that trading session. It closed near its low area. Right? Everyone clear till this point? All right. Now comes the range of candles. The long green candlestick shows strong buying pressure. Now long, when I'm saying, then it indicates that the difference between open and close is generally greater than the difference between open and close of the smaller candlestick with the same color. So the longer green candlestick is the further the close is above the open. This indicates that the price advanced significantly from open to close and buyers were very aggressive there. While long green candlesticks are bullish, much depends on their position within the broader technical picture. Now in isolation, if it is appearing just anywhere on the chart, I cannot understand what is the prevailing market sentiment there. It can be just one time thing. So I need to look at the overall picture, how it is placed on the price chart. So why that is important, we'll come to know now. After extended declines, long green candlesticks can mark a potential turning point or support level. So what happens is, after a steep fall in price, if you get this kind of a candle exactly at this area, then that is potentially a trend changer. It is a turning point and the low of that is going to be respected generally. Generally speaking only, nothing is certain in the market. So if buying gets too aggressive, so after a long advance, if we get this kind of candlestick pattern here, this one, long green candle, then it can lead to excessive bullishness, and also that is reversed, because that is to invite the novice players who are going to buy after a rally in price, and it is going to happen near a distribution area, okay, distribution area, and then price is going to reverse from that area. So based on its where it is appearing, it is going to give us more clarity, not just anywhere on the price chart. If it is forming somewhere in between, that is not going to indicate anything significant. So everyone clear with this? Friends, can I get replies from all of you? I'm getting replies only from few people. All right. Now, just opposite of that is the long red candlestick. It shows the strong selling pressure. The longer the red candlestick is, the further the close is below the open. I'm talking about the red one here, this one. This indicates that price declined significantly from the open and sellers were in complete charge of that trading session. Okay, and the selling was very, very aggressive. After a long advance in price, if this kind of a candle is appearing, then that is a trend changer. It will mark the high of that will become the future resistance. That is a very highly likely situation. After a long decline, if it is forming after a long decline, then it is again forming to invite novices, and it is just there to create panic in the market. So this is how we are going to understand about where the candlestick is appearing, and based on that we are going to make some assumptions there that in future it is going to act as a resistance if it is forming after a steep rally in price, and it is just there to create panic if it is forming after a long decline. Okay, so this kind of understanding we need to develop from here on. Hope everyone is clear about this. All right. Now, based on the close of the candle with respect to the range of the candle, we are going to decide whether that candle is very bullish, neutral, bearish, or very bearish. Okay. So what I'm doing here is I have a candlestick pattern here. Okay. Now the close can happen here, the close can happen anywhere in between. But when I want to quantify that particular candle, I'm going to take the high minus low of that candle. That is going to give me the range of that candle. Let's say the range of the candle is 100. Okay, so I have already got the range of the candle, that is the high minus low. Now, based on where the closing is happening, that it is going to give me more clarity as to what happened inside that trading session and which party won that session, right? So if the candle's close is between 0 to 20%, now 0 to 20% of what, friends? Percentage is always in relativity to something, right? So it is with respect to the range, right? So 0 to 20% of the range of that candle, if it is closing between anywhere in between that, then it is considered to be as the very bearish candle. Okay, very, very bearish, because we'll have upper wick like this, and then the close will be like this. So the upper wick in this case is going to indicate strong selling. The high was this. It can also be somewhere here, but the upper wick is going to indicate that yes, there was some selling, and the close happened somewhere in between this 0 to 20% of that range of the candle, right? So still it is bearish if close is above the open? Yes, we are not going to be biased with respect to the color of the candle. That is why I said I'm going to discuss that more in detail. We are going to take few more examples, live examples. Okay, so even if the color of the candle is green, that is where the close is above the open. If with respect to the range of the candle, it is happening between 0 to 20%, the close, then it is still a bearish candle. Similarly, between close and low are same, so it's bearish. Yes, if the close and low, see, high and low, right? So close is exactly at the low, so it is exactly at 0%, right? With respect to the range of this candle. So it is very bearish, not just bearish. It is very bearish. So similarly, we'll have a bearish candle if the range of the candle, with respect to the range of the candle, the close is anywhere between between 20% to 40%. So that is called as the bearish candlestick. And if we get a closing between 40% to 60%, then that candle is a neutral candle. Now, we are just talking about the close of the candle irrespective of the color, irrespective of how the close is placed with the open. It may be above the open, it may be below the open price. And we are just concerned about the close with respect to the range of the candle. So color is something which we are going to overlook in this case. Now, when the close is between 60% to 80%, then it is said to be a bullish candle. And when it is between 80% to 100%, it is very bullish. So anyone having any query in this? Friends, I'm not getting any replies, so is there any tech issue as such? I did not say anything about the body of the candle. It is just that I mentioned about the close of the candle. If candle close with green with range of 60%, should we consider as neutral? So 60%, just precisely at 60%, if you have that, okay, we can give that candle a bit of benefit of doubt, and we can call that as bullish because it is green. Okay, exactly at 60%, then it can be bullish. Okay, if the close is here, like this. There was a question like if candle close with green, that is the close is above the open, with the closing happening at the 60%, exactly at 60%, just at this boundary line, then what are we going to call that? As neutral or bullish? So we are going to call that as a bullish candle because it is a green candle, right? So we are going to call that as bullish candle. It is very rare that precisely at exactly at these 20% and 40, 60, 80% you're going to get that. It is very rare. But more or less you can make it out like where it is placed. So with respect to the broader picture, you can understand whether that candle is a bullish candle or a bearish candle or a neutral for that matter. So we are going to do a quick exercise. I want everyone's participation in that. So the candle number 1, what kind of a candle is this one? Now I'm just going to go back to the previous slide, just visualize this. Okay, just keep this in your mind. So next two slides will be depending on this. We are going to do that exercise depending on this. So just visualize this, just go through it. All right. So if you're done, please let me know so that I don't have to revisit this slide again and again. Okay. So the candle number 1, as many of you have said that it is very bullish. Anyone who is differing in that? Anyone who believes that this is not a very bullish candle? This is the open, this is the close. Yes, it is very bullish. Okay. So what about the second candle? It is a green candle, so the close is at the top, right? Can I get replies from everyone, please? It is also very bullish. What about this one? The close is here. Now we are not going to always calculate. We need to train our eyes just by looking at it. We need to understand whether that candle is bullish, bearish, or neutral, like that. So the close is here. So can I say that the close is somewhere between 80% to 100%? Can I say that? So if it is between 80% to 100%, it is what kind of a candle, friends? Between 80% and 100%. It is very bullish. Now, 80% to 100% is very bullish, 60% to 80% is bullish. So just by looking at it, at least I can say that, okay, this is bullish candle. All right, not as bullish as these two candles, but it is still bullish candle, right? I cannot exactly say whether it is coming in 80% to 100% range or 60% to 80% range, but I can say that, okay, this is at least a bullish candle, right? Now, what about the fourth candle? Fourth candle. Okay, so those of you who are saying very bearish, now where is the close here? Close is at point number 1 or point number 2? Point number 2. So can I assume that it is between 20% to 40% looking at the range of the candle just by naked eye? The close is always above the open in case of a green candle. As I mentioned previously, the close is always above the open in case of a green candle. Price is advancing for that trading session and it is closing above the open. So just by looking at it, I can say this much is almost 80% for me. So the close is happening between 0 to 20%. So if the close is happening between 0 to 20%, then what kind of a candle is that, friends? What kind of a candle is that? Very bearish, correct. Now, am I going to be concerned about the color of the candle, which is green in this case? It is very bearish. Yes, it is very bearish because it is closing between 0 to 20%. So that is why it is very bearish. And I'm not going to be concerned about the color of the candle. I'm just going to look at the close where it is happening with respect to the range of the candle. Right? So it is very bearish. And what about the fifth one? It is very tricky, friends. Fifth one. Okay. So where is the close? At point number 1 or point number 2? Where is the close, friends? At point number 1. So I did not get that query, Hemanji. 20% of whole range. Are you referring to this candle? See, we are not considering the open minus close. We are looking at the close with respect to the high minus close, high minus low, the range of the candle. So close is roughly it is between 60% to 80%. So that in that case this becomes a bullish candle, not a neutral candle. The neutral candle, it will be only when the close is between 40% to 60%. So I can understand if you are struggling with this bit initially, that is something which is expected, but with more practice you'll be able to spot these with the naked eye. And what about the sixth one? Sixth one, again a tricky one. We need to look at the close with respect to the high minus low, high, low, close. We are not going to be concerned about the open and close, how they are placed with respect to each other. In this case, in this exercise, we are just looking at the close, not the open. So even if the open and close are same here almost, I am not concerned about that at all. Let's say it is this kind of a candle. Open and close still same. So what kind of a candle is this one, which I have just drawn? Seventh one. So are you able to understand the difference? Especially Hemanji? So it is very bullish. Yes. Similarly, this is what kind of a candle? It is bullish. Yes, it is bullish. Perfect. Now, if these candles, the bullish ones, if they are appearing after a fall in price, now can I say that the trend may change if they are appearing after steep fall in price? Can I say that? And after a strong rally in price, if I'm having very bearish candlestick, what can I say about that? It is a potential trend changer, right? So that is how it is important for us to understand what kind of a candle is appearing on the price chart and how it is placed with respect to the overall picture. Let's do this exercise again for the red candle. Okay, the red candle is where the close is here, open is here. Now what kind of a candle is this one? Very bearish. Very bearish. Okay, right, because the close is happening exactly at the low, that is 0% to 20%. So it is very bearish. Now what about this one? The close is here. Just by looking at it, I can say yes, it is very bullish. So if this kind of a candle is appearing after a steep fall in price, it is very bullish. Look at this lower wick. The close is between 80% to 100%. So it is very bullish. So if it is appearing after a steep fall in price, what can I say about the next move? What is the next move? What kind of move is expected after that? Trend reversal, right? Perfect. What about the third one? Where is the close at point number 1 or point number 2? Where is the close, friends? Point number 1 or point number 2? I am concerned with the close. So point number 2 is my close. So with respect to the high and low, that is the range of this candle, where the close is happening. Where is the close happening? %20 to 40%. So that makes it what? Bearish or very bearish? What kind of a candle? Bearish, right? Now what about this one, the fourth one? In case of red candle, always the close is below the open. So this is again a very bearish candlestick, right? Now this is again a tricky example. This is the close. So where it is happening? Don't go with the color of the candle. Don't go by the color of the candle. It is actually neutral, friends. It is happening between 40% to 60%. The close is between 40% to 60%. So therefore it is a neutral candle. All right. And what about this one? This is the close. This may be the open. This is neutral, friends. Neutral again. You can take liberty in that case if it is precisely at 40% or 60%. So you can call it either of that. You can call, if it is exactly at 40%, you can call it a neutral candle or a bearish candle. If it is at 60%, you can call it a neutral candle or a bullish candle. You can take that kind of liberty. But especially if see why I'm saying that is you need to look at that where the candle is appearing on the price chart. So along with that, you can switch from one to other, right? You can call it a neutral candle or you can call it a bullish candle. So if a neutral candle is appearing after a rally in price, that can potentially reverse the trend. Okay, it is more powerful than a bullish candle after a rally in price. Similarly, if after a fall in price you get a neutral candle, then that has more potential to reverse the trend than a bearish candle. So you can take that kind of liberty. So everyone clear with this? You need to practice this a lot. You need to practice this a lot to spot all the kinds of candles just by your naked eye. You don't need to do that kind of calculation all the time. So moving on, let's understand what is the importance of the candlestick. So they are easy to understand. Anyone from the person new to technical analysis to a seasoned professional trader can easily harness the power of the candlestick chart because they are pictorial representation of the price move. We can easily judge from a single candle with its color how the price is moving. This is because the same data required to draw a bar chart, that is high, low, open and close, is used for a candlestick chart, but it is visually more appealing, right? It is visually more appealing. So based on the candlestick charts, we can get earlier indications of market turning points. A candlestick chart can send out reversal signals in just a few sessions rather than weeks, often needed for a bar chart reversal signal. Thus, market turns with candlestick chart will be will frequently be in advance of traditional indicators. So this will help you to enter and exit the market with proper timing. And then it is going to furnish unique market insights. Candlestick charts not only show you the trend of the move as does a bar chart, but unlike bar charts, they show the force of the underpinning move. If you are having long candle, then that indicates excessive bullishness or excessive bearishness depending on the close of the candle, where it is happening with respect to the open. Right. So that is not very visually clear just by a single glance that when we are comparing that with the bar chart. So candlestick chart is always a better chart to look at. And it can be used in all the markets. It can be used in stock market, forex market. It can be used in commodity as well. It is a very powerful trading tool even for options trading, because whenever you're trying to trade an option, firstly you need to form a view, and that is going to come from a candlestick chart itself. Now, at any point during this program, we are not going to recommend that you start trading options because that is a riskier asset. You need to have that proper knowledge. It is an altogether different science. So just understand that you are going to rely on candlestick charts for all kind of your trading, but you can also do option trading, but we are not going to recommend that. All right. So let's look at the different charting types. There are different charting types. First one is the line chart. Now, line chart, it is a straightforward illustration, best used for short trading frames, but limited data compared to the candlesticks. Why? Because in line chart, we are just having the close of that particular session. Right? If I open any chart, let's say daily chart, and I am going to look at the line chart there, then I'm not going to get the other three information which is required for a candlestick. What are those? The high, open, and low. I'm not going to get that. I'm just going to get the close of that trading session. So based on that, you can understand that it is only used for very, very short-term trading, probably even on tick chart or 1 minute chart. And then comes the bar chart. So bar chart is where this kind of a formation is not there. You don't have anything like this here, because that is going to make it a candlestick, right? So bar charts, they are better than line charts for displaying at least the other three data sets, but they are not visually appealing. We can, just by looking at it, we cannot say very clearly what happened there. Okay. So then comes the Japanese candlestick chart, which is widely used form of technical analysis. It is majorly used by all the technical traders. So how it appears? Just the same thing that I mentioned previously. This is the daily chart. Okay, daily chart. So if it is a line chart, what data set I am having here? At different levels, what kind of a data set I have? I'm just having the close, right? So just by having the close, I cannot say that what kind of sentiment the market had. It had been falling, right? But what is happening after a fall in price here? I'm more concerned about that. Okay, where it is closing, it might have gone below that and the close might have appeared like this. So it could have been a green candle, right? So I'm not getting that kind of information just from the line chart. Friends, is my voice breaking? Okay. So Hemanji, I'll advise that you please log in again. That must be a connectivity issue at your end. Yeah. Then comes the bar chart. Okay, so bar chart, it is also not giving me very clear information as to what is happening there. It is comparatively better than the line chart because it is having all the 4 data sets which are important for me, the open, high, low and close, but it is still not that visually appealing for me. So now I have to go on to the candlestick chart with the same data set of open, high, low and close, and it gives me more clarity. It gives me more clarity as to what is happening. Now after a rally in price, see, after a rally in price, you are having what kind of a candle here? What can I say about this candle, this particular candle? It is very bullish. So very bullish happening after a substantial rally in price may indicate what? I just mentioned this in one of the slides shown earlier. Let's see how many of you were paying attention there. After a steep rally in price, if I'm having a very bullish candle, what is that going to indicate? See, fakeout is something which is very different. Fakeout happens of a zone, not just anywhere. You may not be having any data here, right? You may not be having that. So after a substantial rally in price, if I'm having very bullish candle, then that indicates that there is excessive bullishness. Everyone is looking to buy. Everyone is looking to buy. That is a very that is a very common trade, very common perception by all the market participants. So if everyone goes bullish, then price generally reverses after that. Okay. It is going to reverse. It is going to mark a possible trend change. Right? So that much information I can get from a candlestick chart, and which is not available with the bar chart and even with the line chart. That is why the candlestick chart is very, very important for me. I'm going to use only the candlestick chart for all my trading decisions. Now comes the application part of it. Why we have understood how it is forming. We have understood where it is forming with respect to the overall picture. So now comes the application part of it. Why it is important for me also that I've covered. Okay, so how I'm going to use it. It gives more information whether the buyers or sellers are in control. So based on that, I can form some trading decisions if it is forming at appropriate levels or the key levels. Now, each individual candlestick tells a story of investor sentiment, giving insight not only how to trade, but when to trade. So if a bearish candlestick pattern, a bearish candle is appearing around a resistance area, so what can I say about that? I said that there is a resistance in place. So after a rally in price, this may be prior resistance. So after a rally in price, if I'm having a bearish candle here, bearish candle, the close is exactly at the low. I'm assuming that. So what does that indicate? What information I'm going to take from that? Trend is changing, so I can look for short, right? The prevailing trend was up. So when price hit that resistance level and it formed this, the market showed me that yes, it wants to go down. So I can take some short trades, right? So in the upcoming session, you're going to understand like in which levels you're going to trade. You're just not going to take trade. You're just not going to enter at market. You need proper levels. You need your key levels. So that is going to be covered in the price structure session. But just have this clarity in mind that where it is happening and why it is there. So it is going to give us an insight when to trade, when to enter a trade. It also provides information about the support and resistance levels. Now, just by candlestick, let's say I don't have any prior data. Okay, so I have just one candlestick, which can be a candlestick of yearly chart, let's say, and I have this kind of upper wick, and this is my lower wick. Now, for the next year, let's say this is 2016. Now comes to 2017. So for 2017, what is going to be my resistance and support? You tell me, friends. Support is where the buying emerges and resistance is where the selling emerges. This is the high, this is the low. So which area is going to be my support and which area is going to act as resistance? So the lower wick is going to act as my support. The upper wick is going to act as my resistance. So candlestick charts, they also provide the support and resistance levels. Okay, they also provide support and resistance levels. Now it is not just the low or the high which is going to be the resistance and support levels, because resistance and support levels are not just precise price points, they are actually areas, they are zones basically from where the price reverses. So it is actually, let's say this is the open and this is the close. So open minus low is my support. Okay, this is how I'm going to first introduce you to the zone. What is a zone? I'm introducing here. Okay, it will be covered more in detail later. So support is the lower wick, complete lower wick is my support, complete upper wick is my resistance. Right? Price is not going to reverse from exactly one precise point always, because that becomes an easy trade, and institutions, they play a lot of trick there. So I need to be very careful when I'm entering into the trade just exactly at the high or just exactly at the low. I need to be very, very careful, because a lot of tricks are going to be played there by the institutions. So the majority of popular charting systems, they utilize candlestick signals and patterns in their scanning systems. So people who are using advanced systems, they use candlestick patterns to get some trading opportunities and to get some signals, potential reversal signals can also be used by this. And it gives us the information about the origin of buying or selling pressure. Now I just mentioned like where the support and resistance can be. So the support area is where the buying pressure will be, that is the low and this area, the lowest body, and the highest body and the high will be the sell area, or the selling pressure will be there in the upper wick. Everyone clear with this? Everyone clear with this, friends? Just one person is replying, friends. We are taking you from the very basic level. So if you are not with me, if you're not following me, then it is not a good thing, friends. You need to come into the session with very clean slate. You need to start from scratch. You need to be very attentive. Three out, five is clear. Okay, you mean to say the third point? Are you referring to the third point? You want me to repeat that, Hemanji? 3 to 5, which I attend clear. I'm not getting what you are trying to say here. Hope you are clear with whatever I have delivered so far. Okay, you want me to repeat the first and second point? So the application part of the candlestick is that it gives us the information whether the buyers or sellers are in control. So हमें ये पता चलता है कि कौन कंट्रोल में है just by the candlestick. अगर candlestick ऐसा long candlestick बन रहा है जिसमें क्लोज ऊपर हुआ है ओपन के, तो हमें ये पता चलता है कि बायर्स कंट्रोल में है उधर. ठीक है, तो सिमिलरली अगर हमें ऐसा लॉन्ग कैंडल मिलता है और क्लोज नीचे होता है, तो हमें ये पता चलता है कि क्लोज नीचे हुआ है तो सेलर्स कंट्रोल में है. ठीक है, तो जस्ट ये कैंडलस्टिक देख के हमें ये पता चलता है कि कौन कंट्रोल में है, और अगर हम उससे साथ में मिलाते हैं कि उसके पहले क्या हुआ था उसके पहले, तो हमें पता चलेगा कि हमें किस तरह का ट्रेडिंग डिसीजन लेना चाहिए, बाय करना चाहिए कि सेल करना चाहिए. तो ये 2 पॉइंट का इसका कंक्लूजन मैंने आपको इतने से में बताया है. राइट, ओके, सो आई मूव ऑन. Friends, please feel free to ask me anything. If you are not clear with any point, don't hesitate. Okay, we are here to learn. Never hesitate. 3 scenarios: a neutral candle after a long rally. Okay, a neutral candle after a long rally. Next, a very bullish candle. Okay. Very bullish candle after a long rally. Okay, that is an interesting question. I'm liking it. Okay, then third is a very bearish candle after a long rally. Okay, the close is here in the third case. What will be the anticipation? Okay, now you understand that there are 4 types of trades which can happen. First is when you enter a long trade, fresh long is being initiated, right? Fresh long is being initiated. Then second one is when you're covering that long or you're unwinding that long, right? Third one is where you're taking fresh short position. Okay, fresh short position is being created. And lastly will be the covering of your short covering. Now, in out of these 4 cases, in 2 cases, when you are creating a fresh long position and you are covering your short, you are actually buying, right? And when you are unwinding your long and you are creating a fresh short position, you are actually selling. So, if the market participants, they have this kind of a candle, then after a rally in price, what may happen is we can assume that there has been some long unwinding there. Some long unwinding is evident here. Okay, some long unwinding is evident. So long unwinding, just by having a long unwinding, that is not a potential trend changer for me. Not as strong as what I'm going to say about the other 2. Okay, it is not as strong as that. Now, that is the first scenario. So are you clear with this? Now comes the second scenario. Now what is happening is, after the strong rally in price, it is creating a very bullish candlestick. So after a steep rally in price, who is going to buy again? Okay, there may be people who have already gone short somewhere at this place, and after seeing that, okay, the price has already reached that level and it is causing pain to their position, they are covering their shorts. So this is short covering. This is short covering. So short covering happening after a rally in price, it may indicate potential bullishness, right? So we need additional confirmation We need additional confirmation that the price wants to reverse actually, or it is going to continue in this direction. We need additional confirmation there. So this case is actually bearish. In this case, this is not giving any signal for me. And here friends, where the close is here, very bearish candle is appearing after a strong rally in price, then it indicates that there has been not just long unwinding, but fresh shorts are being created there. So this is very bearish. It is very bearish. The third scenario is very bearish. I don't need any additional confirmation there. I can simply go on to the lower time frame. If I'm having this chart, this is appearing on daily, I can go on to the lower time frame and I can take a shot there if I am having a key level there. Okay. So, but this candle can be formed at each vertical resistance. So that is why we have mentioned that the major resistances, they are very important, not just the minor ones. So minor ones are going to give you small reactions and the major ones are going to give you big reactions. Okay, you wanted me to explain the three scenarios again. First is the fresh long, then long unwinding, fresh short, and short covering. Short covering is actually nothing but buying. Fresh long is also buying. And these two, long unwinding and fresh shorting, is actually selling, simply like that. Right? These are four scenarios, four possible scenarios. Okay. Now what is happening in this case number one, where I am having a neutral candle? Okay. So neutral candle indicates what? After a rally in price, there is no participation as such. So possibly I can assume that there was some long unwinding there, because there was upper wick here. So upper wick is appearing after a steep rally in price. So I can say that there was some long unwinding there. So long unwinding just by that is not a very bearish signal. It is just a bearish signal for me because there is some long unwinding. Some people are selling there. Then comes the second case where the close is happening above the open. It is very bullish. Okay, so people, yeah, see, buyer, in totality, I have to look at that, right? In totality, I'm looking at that. So what can happen after a rally in price? There is a high chance that the buyers, they are going to cover their position. It is not that the sellers are going to pitch in very strongly. First is when the buyers are going to cover their position. So long unwinding is more expected there. And that is actually a very interesting question that you asked. This will give clarity to everyone. Okay. So in second case, it may be causing pain to some existing short players. Okay. And that is why they are covering the short. So they are buying. And it can also be driven by a news or excessive greed. Okay. So along with short covering, people, the novices, they are going to jump on this trade and they are going to buy. But I need additional confirmation where that news has already been supported by the chart or the market sentiment as such. So I need additional confirmation there. So from that, I cannot say anything very clearly about what is going to happen next. And third one is it can also be followed by a bad news. Yes, but it clearly shows that there just not had been long unwinding, but there has been some fresh shorts being added there. Okay, so based on that, I can say that this is very bearish, this is bearish, and this is almost neutral. I cannot take any decision based on that. Now neutral is the sentiment that I'm having, not the candle I'm talking about. So Yusuf, are you clear? And AP also? Perfect. So are you clear, AP? Okay, great. Now, what we have already understood what the candlestick tells us, but there is something which the candlesticks also they are lacking. Okay, they are not giving that much clarity just if taken in isolation. So each candlestick of a particular time frame, it does not reflect the sequence of events between the open and close. What happened between the open and close? It just gives us the relationship between the open and close, how it is placed with respect to the other. It is just giving that kind of information, and the high and the low are obvious and indisputable, but the candlesticks or the bar charts cannot tell us whether the open came first or whether the close came first. Okay, I mean, not the open and close, actually the high and the low, which came first. We cannot say that after the price opened here, after price opened here, it went up or it went down to create a low or a high. We cannot say that just by looking at that candle of that particular time frame. Okay, we cannot say that. So this is the candlestick. Okay, this is the candlestick, but the sequence of the high and low can vary. Okay, it can vary. It can give us the same candlestick on the higher time frame, but when we go on to the lower time frame to find out which came first, we are having different sequences of events. So with a long green candlestick, the assumption is the price advanced most of the session, right? I just mentioned this previously. However, based on the high-low sequence, the session could have been more volatile, right? This example here depicts two possible high-low sequences that would form the same candlestick. The first sequence shows two small moves and one large move, a small decline of the open to form the low, a sharp advance to form the high, and then a small decline to form the close in the first scenario. Now, what does this portray? It portrays a strong, sustained buying pressure and would be considered more bullish, friends. It is the case number one, the first sequence of event is more bullish. Okay. Then comes the second sequence, which shows three sharp moves, a sharp advance of the open to form the high, a sharp decline to form the low, and a sharp advance again to form the close. It reflects more volatility, and some selling pressure was evident when price fell off the high to form the low. Now, out of these two, the first one is more bullish, friends. First one is more bullish because price advanced for most of the session. So this is where the candlestick, if taken in isolation, is lacking. We need to go on to the lower time frame to understand like what happened there. Now the second case is not an ideal case. It is very rare. It is very rare that we get this kind of volatility. It is generally accompanied by some news which is not expected by the market. Generally on the earnings day, when there is earnings announcement, market participants, they are not very certain as to the earnings going to be good or not. Especially if it is coming, it is going to be announced in the live market. So this kind of movement is evident on that trading session day, right? So everyone clear with this as to when to consider the candle to be more bullish and when it is more bearish. Friends, can you please be prompt in your replies? Or is there some lag in between? Yeah, you just open the, you just open the intraday chart, or let's say you're looking at the monthly chart, okay, monthly chart you're looking at, okay, and then you go on to the daily time frame. So daily time frame, there will be a lot of movement like this, okay. So when you're trying to quantify like what kind of a candle is this, the monthly candle, we need to go on to the lower time frame. It can be weekly, it can be daily as well. So from just by going one time frame lower also, you'll understand whether to consider that candle to be more bullish or more bearish. So it's not just that throughout the day you need to look at the movement. It's just that you need to look at the sequence of events. Okay. Similarly, you can have to go from the daily to, let's say, one time frame lower could be, I'm saying, okay, 15 minute. Okay, that is a good time frame to look at, or probably hourly, or even 5 minute also. A lot of noise will be there on the 5 minute, less noise on 60 minute, and little bit of noise on the 15 minute. But it is going to give me more clarity as to what happened in that trading session on the daily chart. All right. So everyone clear till this point? Now these are just two examples. The sequence, now I just mentioned the two scenarios, two possible scenarios. There can be hundreds of potential combinations that could result in the same candlestick. Okay, I just have drawn for you, like it can be like this also. So what is this? This is not a very strong advance, or it can be like this, consolidation, like this, consolidation, like this, consolidation, and then rally. Okay, so it can be like this also. There can be hundreds of combinations like this. So candlesticks still offer valuable information on the relative position of the open, high, low, and close. However, the trading activity that forms a particular candlestick that can vary, and we can judge that based on the lower time frame. So 5 minute chart can be, this can be 60 minute, this can be 15 minute chart. Okay, this can be the same chart on the 5 minute. Okay. So based on what kind of a trade we want to take, we are going to look at different time intervals. Now comes the blending of candlesticks. You have just unraveled the part where the higher time frame candlestick, it is appearing on the lower time frame. Now we are going to understand how to blend the candlesticks on the lower time frame and form a candlestick on the higher time frame. Right? So candlestick patterns are made up of more than one candle and can be blended together to form just one candle. This blended candlestick captures the essence of the pattern and can be formed using the following. So first one is the open of the first candlestick. Then comes the close of the last candlestick. Now it can be a range of candles. It can be 4 candles, 5 candles, 10 candles. How many candles? So many candles we can have. Like 60-minute candles we can have. In Indian market, there are 7 60-minute candles. When we go on from a daily chart to 60-minute chart. Right. So the last candlestick's close is what we are going to take into consideration, and the open of the first candlestick is what we are going to take to form the candlestick on the daily chart, and then the high and low of all the 7 candles, which is the highest point of that and the lowest point of that group of candles. Right. So in theory, are you clear with this, that you need these 3 things to form the higher time frame candle? You need to blend using these information. No, it is not actually related to the math. It is just you're just going to observe that. That's it. You just need to spot it. That's it. No calculation is required at all. So let's get into it. Like here. Now disregard the pattern name here. Okay, just disregard that because we have not yet covered with you what the patterns are. But here this is a 2 candle pattern. So what this may be half yearly chart and we want to understand what is happening on the yearly chart. So 2 half yearly candles forms 1 yearly candle. So we are going to take open of the first candle. Now this is a black candle, so the open is above the close. This is a white candle, so the open is here and the close is here. So the open of the first candlestick will be taken into account. This will be the open of that yearly candle, and then close of the last candle, that is the second candle, will be taken into account. So that's how we get the close. And then the highest point was of this entire range of candles was this, lowest point was this. So that is how we get this candle. Similarly here, we are going to repeat the same thing, open of the first candle, close of the last candle, and the high and low of the entire range of the candles. So that is it. So it can be 2 candle sets, it can be 3 candle sets, it can be even more than that, right? Like this. So more than 2 candlesticks can also be blended together using the same guidelines of the open from the first candle, close from the last candle, and high and low of the pattern. Okay. So here, like, you must have heard about this kind of a pattern. So it is nothing but this pattern on the high time frame. So you don't need to even remember these pattern names as such. Just understand like what is happening there. Open of this, close of this, and high of this, and low of this. You get this kind of a candle. Long green candle or white candle. That indicates strong bullishness, that indicates that buyers were in charge completely. And on the low time frame, it is just advancing, not moving in a zigzag manner. It is not a volatile session. So it clearly indicates that there was buying pressure, strong buying pressure. In first example, if we reverse the candles, okay. First example, you want me to take this? Okay. So I'll draw it for you. The activity will be same. It will be same thing, that I'm just going to draw this kind of a candle. Okay, then comes this, right? So first one is the green one. So the close is here, the open is here, open. So first one, I'm going to take open of that. This is my open. And what happened after that? Second, this one is red one. So close is here. So I get close here. This is my close. Okay. So close is above the open. So that makes it a green candle, right? And the low is exactly, okay, low can be a little bit below that. And this can be the high. So green candle, open here, close here, low here, high here. Very basic thing. You can have hundreds of combinations like that. Just concentrate on open of the first candle, close of the last candle, and high and low of the entire pattern. Like that. So everyone clear with this, the blending of candles? Please mention this because you have to do this this exercise in today's homework, today's session's homework. You have to do this. If at any point you're not clear, please ask me. And today I'm not giving you a 5-minute break because I have lot many things to cover. Okay, you must be expecting that, so I'm not going to give you that. Okay. Do we need to keep these combinations in mind? No, not at all. I just mentioned that these patterns, you don't need to remember. Okay, you don't need to remember. You just understand what happened in that training session. That's it. So if everyone is clear, I'll move on to the next slide. So this is how the candles are going to appear on the lower time frame. So you take the high of the entire range of this candle, then you take the low of this, then you take open from the first candle, and then you take the close of the last candle, and that's how you blend it together to form this kind of a candle. Right? Is it making things more clear to you? Friends, everyone clear with this? All right. Then comes the higher time frame to lower time frame. So higher time frame candle can appear in this manner also. We are just going reverse here. Initially we blended the candles together. Now we are going from higher time frame to lower time frame. Now why we are doing that is we just need to understand like what happened on the lower time frame, how the events they progressed. Okay. First there was selling to create a low, and then there was buying. Ultimately it closed in the 80 to 100% range. So that makes this candle, what kind of a candle is this, friends? The high time frame candle. This one. This is the close. This is the open. It makes this candle very bullish. So ultimately bulls, they took charge of that trading session, this trading session, and then we have this kind of a candle. Right? So just another example of that is where we have 4 weekly candles to form 1 monthly candle. So what happened here? There was selling initially, then there was strong buying overwhelming the sellers, then there was a neutral candle, and then at the later portion there was some selling again. So that results in this kind of candle. This is what kind of a candle, friends? This candle I'm talking about, the high time frame one. The open is here, the close is here. Can I say that the close is happening inside 60% to 80%? So it is bullish, right? It is bullish. Even if there was selling initially and there was selling evident even towards the close of that session, I'm still having this bullish candle. Okay. Now, friends, this is very important. I mentioned this initially in the session that we need to understand the order flow of the candles. Okay. So hear me out very, very clearly, because this is going to help you a lot in taking the trading decisions and reading the market, what is happening and why these candles are appearing and what does that indicate. Okay. So be very, very attentive. Candlestick charting, it should not be used in isolation to other analytical techniques. Okay. Here we are going to explore some of the theories behind why a support and resistance works so well in helping to fuel the movement of this currency pair. Like this is a currency pair actually. So you will see that candles are excellent for detecting trend reversals and even continuations for that matter, especially near a support level or a resistance level. Okay, so to understand how we can use candlesticks to know more about the supply and demand at any given moment, we will start by following a candlestick chart, changing step by step as to what kind of a candle is appearing one by one, and by seeing how the candles are shaped. Okay, we have already covered how the candles are shaped, the long candles, narrow range candles, even how the close is with respect to the range of the candle. So based on that, we are going to take a decision where to enter and exit and continue holding on to a position which is in profit. All right. So in this picture here, this is a currency pair actually. So here in the first candle, which is this one denoted by one number, what is happening is price is advancing from 1.25 to 1.255. So the reason by looking at the candle is that the price moves higher can be assumed as the concentrated burst of buying activity despite the supply being kept constant. So buyers, they wanted to buy this currency pair at whatever price is available. So this imbalance, it helps fuel the exchange rate to rally to a higher level, that is 1.255. Okay. Then what happens is, if the demand, it keeps on increasing, okay, it keeps on increasing and supply disappears. Now this is a relative term. Okay, it is always that the buyers they have to be met with sellers only, then the currency pair is going to be traded. But I'm going to use this relative term that if there are more buyers, then with respect to the sellers, the quantity of buyers, it is more. So when I'm saying that if demand, it keeps increasing and supply disappears, by that I don't mean that there are no sellers at all. There are sellers, but when compared to the buyers, they are less in quantity. The currency pair they are offering is less in quantity. So the exchange rate, it will rise further in this candle. This means that there are many buyers and almost no sellers with respect to the buyers. There may be 100 of buyers and just 5 sellers. So that is why price advanced in this candle, this particular candle, the second one. So everyone clear till this point what is happening? Now I'm just reading one candle by one candle, and after that the other candle. And I'm trying to understand as to what is happening. I don't have this information on the right of this chart. First I was here, then I had this kind of information, then I had this rally, then I assumed that there were almost no sellers, and then after that I am having the third candle. So what is happening in the third candle? Now what kind of a candle is the third one, friends? Bearish, bullish, or neutral? Just tell me whether it is a bearish candle or bullish candle or a neutral candle. It is a bearish candle, right? So what was evident there was, since it is a bearish candle, the sellers were in charge. So if the number of buyers, they keep holding the pair, okay, people who bought initially, they keep holding the pair, but the next group of sellers, okay, the next group of sellers, it is stepping in to sell the currency pair. So exchange rate, it falls. They are thinking that, okay, it is overbought. They are assuming that it is expensive at this level. So they are going to sell. The next group of sellers they are coming in and they are offering the currency pair. So what happens is, from this level, that is the high of this candle, the exchange rate falls to close the session near its opening price. So the close is here. So it is almost close to the open price. This indicates first signal of demand exhaustion. Okay, people were reluctant to buy it at the high level. And ultimately, sellers took it down. So everyone clear with this point? So from here, the high point is where the selling originated. Just keep this in mind that this is the resistance area. I'm going to discuss this in the later half of this order flow session. Okay. Now comes the fourth candle. So at this point, what happens is, traders who bought at low level, okay, now traders who bought somewhere here or here, they realize that the pair is coming out of overbought levels and people are selling it there. They are initiating fresh short in anticipation that the pair will pull back, which is indeed the case. When buyers cover their position, so when buyers, they are going to cover their position, they are going to sell, right? And if they are selling, then price is definitely going to go down. So the buyers, they are unwinding their position here, and that is why we have the open here and the close here in this fourth candle. And they are basing this decision because of the prior move which was there in the third candle. Okay, there was demand exhaustion, price fell from that highest level and it closed near the open. So based on that, they are taking the decision that okay, now it is time to unwind their long. Right? Everyone clear with this? Sukesh, Yusuf, AP, Ishwar, are you clear with this? This is very important, friends. So please be attentive and please be prompt in your replies. In this reading the order flow with candles, I'm just collating all the information that I have just discussed in today's session. So what happens after the fourth candle is at this low level, there is still a large number of traders willing to buy at a better price. Okay, they want a better price for themselves. So they are still continuing buying, but also there is a large number of diehard sellers who are not covering their positions. Okay, they are just averaging in their profit. Okay, they are continuing to sell here. So selling is evident and buying is also evident at the same pace. So what kind of a candle are we having here? What kind of a candle is the fifth one? It is neutral. So the buyers and sellers, they are almost equal in number. So the supply and demand is actually in equilibrium. And as a result of that, the rate of the exchange, it does not change. So where it is happening? Okay, it is happening after a rally in price and indecision candle. It signals that potentially trend may change now. It is very early signal. I'm going to look at this in totality. Like there has been steep rally in price, small corrective move, and then this candle is appearing. Right. So what happens in the sixth candle? Now this continues for till this point. Now comes the sixth candle. Okay, sixth candle now I'm talking about. So in sixth candle, more sellers and buyers enter the market, and some of the traders who had open positions, some were long, some were short, they reversed their trade direction. Okay, they closed their position. So what happens as a result of that is the volume, it picks up considerably as everyone is buying and selling it to each other. So volume increases, but what happens to the exchange rate? There are more buyers and more sellers. What is going to happen for this entire range of price? We cannot say that it is an accumulation, Ishwarji, yet. हमें accumulation और distribution का तभी पता चलेगा जब या तो resistance के ऊपर जाके price close हो जाए या resistance के नीचे या support के नीचे जाके price close हो जाए, तभी हम बोल सकते हैं कि वो accumulation है या distribution है. तो मैं अभी ये 6th candle पे खड़ा हूँ, तो अभी मुझे पता नहीं चल रहा है कि ये high के ऊपर closing आया है या ये low के नीचे closing आया है. So it is just a sideways range for me, just a consolidation is happening. And the volume is going up because there are more players coming into the market, but at the same time, net basis, there is no imbalance between the buyers and sellers. All right. So suppose that you are a buyer who has bought the pair at the high that is around this level. Okay. And you have a high tolerance for pain. Okay. You have a high tolerance for pain. So you have bought here, now price is somewhere here. So you are actually in a loss, right? But you have very big pocket and you have the high tolerance for pain. So you are not going to cover your position when the pair dropped from that level, the third candle's high. So even though you are in deep losing territory, you are not going to immediately cover your position. Why? Because you are hoping that the trend may resume up, okay, to see the price passing the point where you had initially went long to actually come into profit. So the question is, however, where will you cover if the price does not continue to rise? If at all it is not going to come to your cost or even beyond that, then where are you going to book your loss? Okay, so if a player is not clear with the exit strategy before initiating the trade, he is going to have all these questions after an unfavorable move. So the answer is that you will probably wait and see how the currency pair behaves around this area of consolidation, because now we are not very sure as to what kind of a consolidation is this. Is it going to be an accumulation area or a distribution area? So if it crashes through the low of the fifth candle, that is this, you are going to cover your position. You are going to sell here. If price goes below this, the low of the fifth candle, that is the point that you are making on the price chart. So you are going to keep a stop loss. You're going to keep a stop loss below the low of this. So as soon as that is hit, you are going to sell. You have gone long here and you are keeping a stop loss after seeing this unfavorable move here. Okay. So what happens if it crashes through the low of the fifth candle and continues to fall further? You're going to quickly cover your position and cut your losses short. But if at all the pair reverses and starts to climb, you'll be happy to hold on to your position, and you'll think that yes, you have taken a wise decision, because now you'll see that you are in profit if at all price goes above this level. You have bought initially here. That is what I'm assuming. So this is going to act as support till the point it is being held. Okay, it is going to act as support. So as you can see, the consolidation range is very important decision area, and depending on the way the pair breaks out of it, that is going to have future reference. Okay, it is going to have future reference how this is breaking here. So after that, after the break, that is before that actually there is a seventh candle. So the process of this, it is creating a lateral price movement, that is a sideways range. It is going to repeat itself until the traders start to lose interest. Okay, they start to lose interest in keeping their position open for more time. They are seeing that it is not moving in their favor. The sellers who have sold to the buyers here, they are seeing that they are in profit and still the price is not moving in their target area. Okay, and people who have gone long here and still have not covered their long here, they are still holding on to their position, and they'll think, okay, let it move even beyond the high of the third candle. So they are going to continue holding their position. And even there are fresh sellers who pitched in here, and then there are buyers who bought it here. So even three kind of parties are stuck here. Okay, buyers who bought here, and sellers who pitched in here. Right. So what may happen is now I'm seeing that this move is happening on the upside. So based on that, I can say that one of the sides, let's say sellers, because price is moving up, so the sellers, they give up. Okay, they give up and they cover their positions. It is in a profitable territory, so they cover their position. So buying is going to happen. So the volume is going to drop here, and buying will happen. Why? Because the buyers, they remain the same, but as soon as there is no seller left, the exchange rate, it rises. So the rally here is actually due to reduction in supply and not because there are more buyers. So now the volume will drop. Now, can you see this? The price is moving up, the volume is dropping. So there is a divergence between the two. There is a divergence between the two. Can I say that? So at this stage, however, the astute candlestick reader will be able to observe that the bullish trend at the left of the side, left side of the chart, and then he or she is going to deduce that the buyer demand will be exhausted when price reaches the recent high of the third candle. Okay. Now I mentioned that this is a resistance area because this is actually where the first pair of sellers they pitched in, right? So it is going to act as future resistance. This behave showing by stochastic indicator. In our program, we are not at all going to talk about indicators and oscillators. Everything is depicted by the price itself. Okay, everything is depicted by the price itself. So I just mentioned this, the volume part. Even volume we are not going to use, but just by looking at this, after this kind of a move and price reaching this level, I can say that yes, the move was not a very strong move, and that must have been because of less participation, right? So when price reaches this resistance zone, that is the high of the third candle, a whole flurry of sellers they step in anticipation of a downside move. So they start selling here. Okay, they start selling here. So what happens is price forms these two candles, rally and then drop here. Now this is actually a reversal candlestick pattern, especially if it is forming in line with this resistance. Okay, so here this is actually a dark cloud cover. Now we are going to cover that more in detail in the candlesticks advanced session. What is a dark cloud cover? But just assume that it is a bearish reversal signal. The exchange rate is now going lower, not higher. This after the completion of this candle here, we can say that okay, now the candle is appearing like this, so it will not go up now. So now what happens is it explains how a prior resistance can become again an area where supply exceeds demand. So after the close of this ninth candle, I can see that yes, the supply is still there and it is overwhelming the buyers. Okay, so what the market participants are going to do? So when a pair is rising and encounters a resistance, trader will use that barrier either as a target to exit their long positions, or they are going to initiate fresh short positions. So the reverse often occurs when the price is reaching a support area. Okay, now in this case it is actually the resistance area, and people who have gone long somewhere here, they are going to book out. People who have gone long here, they are going to book out in minor loss, and people who have not covered the short, they are going to, the volume will be low, at its low. Now in the ninth candle, the volume can pick up again because a new group of sellers, they have pitched in. So in the ninth candle till eighth candle, the volume will be low. It is going to fall. But in the ninth candle, generally the volume is going to pick up suddenly. So when I compare with when I look at these two candles, the green one and the red one, the volume bar will be like this. But that is the ideal case. It is not necessary that the volume is going to be like that always. It is not so, because you never know that what kind of pain level people may have. Okay, they may be having they may be waiting for a 10% loss on their position, or they may be waiting for a 50% loss on their position. So you never know whether when they are going to exit majorly. But if it is forming at the prior resistance level, this kind of a pattern, so the wise decision will be to actually start selling. Okay, that is the wise decision. So by observing the candlestick color and the relative size and relative position, the candlestick reader is able to deduce what the other traders are thinking and estimate what is the most probable outcome in the future of the price. Right? So I think by now you've probably noticed that during this analysis we have not mentioned any details about what kind of currency pair is being traded, or if there has been any news affecting the price action, and we even barely mentioned about any technical indicators. Now volume is not a technical indicator as such, so we have not even covered any kind of indicator here. It is pure raw price action, right? So the reason for this is because we are dealing with the order flow of the candles, and this can be utilized for even short-term trading and even long-term trading. So the most important element is a good understanding of what the candles are transmitting about the price behavior. Okay, we have a question. Then how will we know whether 8 or 9 is a fake out or a breakout? See, firstly, we have not covered what the fake out is. Okay, we have not covered yet. We have a separate session for that. But just to address your query, if the high of this candle, we don't get a close above that, then it is actually a fake out. If we get a close above the high of the third candle, then that is a breakout. Even fake outs fail, even breakouts fail. So we need to look at this in totality, where it is forming. Okay, where it is forming, that is very important. So after a steep rally in price, if you have a breakout on the upside, then that is not going to invite you very aggressively to buy, because the price is already rallied further. But that is, if it is a fake out, then that is definitely going to invite you to start selling, because it has happened after a substantial rally in price. All right. So everyone clear till this point that whatever the nature of the underlying B, we are actually interpreting the price behavior, okay, and we are doing that in advance. We are doing that in advance without any lag. But after support breaks, will it be a confirmation of trend change? Support is here. This is the support. The above one, this one is the resistance. So if one of these two breaks, then it is actually giving us the signal that price wants to continue in the direction of that engulf. Okay, if price closes above the high of third candle, then price is going to, that is our assumption that price is going to go up. And if it closes below the low of fifth candle, then it is our assumption that it is going to go down. Okay, so will it be the flip SR? No, SR flip is which the market is going to prove, okay, only in future. That is not what we can say currently about that. Okay. So as shown in this example, the only element that will move an exchange rate is higher or lower is actually the willingness of the trader to participate. So if the trader is willing to buy it at a higher price, the price is going to go up. Okay, a currency may have rock solid fundamentals, but if no one is willing to exchange it for another currency, that is the currency pair, the exchange rate will not go up. Okay, the same is when the pair is overbought up for a long time. Okay, if no buyer is there to step in and buy the base currency, the pair will keep falling. Okay, it can keep falling. Can we call 8-9 in Wyckoff as spring? Yes, if price is going above the high of the third candle and then not closing above that, then that is actually the not spring. Actually, this is happening after a rising price, so this is an upthrust, not spring. Spring is just reverse of that. When you have a price going below the low of fifth candle and not closing there, that is a spring. This is the upthrust. So upthrust is an early signal. Upthrust is an early signal that price is distributing, not accumulating. It is just a signal, cautionary signal. Based on that, you should not be taking any trade. So are you clear with that? So this is why it is important for short-term and swing traders to learn how to read the market through the eyes of the other traders. Okay, not just the eyes of a financial analyst. You need to understand what kind of a trader is sitting on the other side of the screen. Okay, so candlesticks are a great way to methodically unravel the clues regarding the market sentiment and order flow. So how many times has this situation happened to you that you have entered a trade based on a bullish reversal signal, let's say a hammer, but then you exit on a slight pullback only to see that the currency pair or the stock is actually rallying to a new high just after you exit? How many of you have seen that? You're buying based on bullish candlestick confirmation, and on a slight pullback when you get a very tiny loss, and you think the broader market are going to be going against you, and you exit the trade. How many of you have faced that? Okay, have tried based on demand supply. Okay, strategy. Okay, yes. So unfortunately, there is no system that can predict with 100% accuracy where a greed rally or a fear sell-off will begin. So there are, however, techniques based on candlestick patterns and the price action concepts that we are going to cover in this program that is going to increase the probability of working of your trade, and you are going to you'll be able to identify the highly probable areas for these turning points. That is what we strive to deliver in this program for all of you. But you need to understand, you need to be able to reason every price move, and you need to understand as to what kind of a trader is sitting on the other side and what he or she is thinking, whether that player is an institutional player or just a novice player. So anyone having any query with this order flow of candles? Anyone having any query, friends? Seems all of you have slept already. Is this session that boring? Okay, willing to see the same in live chart. Okay. So that is what we expect you to do actually in the homework of this session. So when you think yourself first, when I'm delivering this session, it is a little bit easy for you to understand. But when you yourself look at the chart and try to reason that price move, and you read the order flow with candles, that is where the struggle is going to be. So you first do that, and then we are going to help you with that. So that is how the learning will improve. Okay, but we are definitely going to do that. So moving on, moving on. The next portion is to how to identify a consolidation candle, the indecision candle that we call as the base. What is that? How can we identify a base? Okay, base is where the consolidation happens. Okay, from where the imbalance starts, it originates. So what we are going to look at is we are going to look at the body and the range of the candle. Okay. So here what we are doing is, if the body is actually the open minus close is less than or almost equal to the half of the range of the candle, that is high minus low. Okay, almost, that is 55% that we are saying. Okay, then the candle is said to be a consolidation candle or a base candle. Everyone clear with this in theory? I'm going to take an example now. So what I'm doing here is, when I'm talking about the body of the candle, it is always the open and the close difference in each and every time frame. It is applicable in each and every time frame. Why I'm giving this here is because in the next session, we are going to be talking about the price structure, and that is where it is important, because we need to identify key levels, clear zones from where the demand and supply imbalance is originating from. So this is the body indicates the open minus close, the difference between the two, no matter what is appearing where. And then the range is high minus low. So if at all the body that is open minus close is less than or equal to 55% of the range of the candle, then that is said to be the consolidation candle or the base candle. Right? Everyone clear with this? Okay, so let's check it on a chart. We are giving this concept. See, I'll give you, since you have mentioned it. Now, tell me, what can you say about this candle, this particular candle? First, it's actually a narrow range candle. So that mathematical formula that we just gave you is actually a general guideline. It is not strictly to be adhered to. Are you seeing the candle, friends? I'm talking about these three candles: the green candle, red narrow range candle, and then again a red candle, big one. So it is still a base or a consolidation candle for me. And see what the price is doing there when it is appearing there. Why is it taking a pause? If it is not a supply zone, if it is not a potential sell area, then why it is taking a pause there? It is definitely a reversal area. That is why the price is taking pause there. Now we are going to get more into details of it in the next session. Okay? But just understand, like in theory, you need to understand that it can be less than or equal to 50%, 55% of the range of the candle, the real body. Yes, that is why I said, that is why I said that this is a general guideline. This is a general guideline because when you are trying to identify the zones, you need to have some base, right? You need some guideline to be able to identify that. You cannot simply say each and every candle, narrow range candle, that it is a base. narrow range candle needs to be looked at in totality with respect to the candle preceding it and following it. Okay, so that is how you're going to identify that. You need a lot of practice in that, because I see that a lot of you are actually used to using that calculate that indicator, but we are strictly going to advise against that. You want me to go on to this chart? Okay. इसमें मुझे क्या और दोहराना चाहिए ईश्वर जी? Okay. So what I said is when I'm trying to see, this is an exceptional case here. Is my voice clear now, Pradeep Sharma ji? Okay. So what is happening here is price is rallying. Price is rallying, right? Price is in a narrow range with respect to this candle and with respect to this candle, right? So it is in a narrow range. This is a narrow range candle. The range of this candle is a narrow one. The high minus low, when I'm comparing that with the high minus low of these two candles, then can I say that it is a narrow range candle? So a narrow range candle appearing in between two expanded range candles, that is a base or a consolidation candle for me. Now we have given you that mathematical formula that the open minus close is actually, if it is less than or equal to 55%, then the 55% of the range of the candle, that is high minus low, then it is said to be a base candle. But that is a general guideline, okay, for beginners to understand, to be able to spot the zones, the consolidation candles. You need to spot the consolidation candles. That guideline is just for beginners. This is more advanced application of that. And there will be plenty of such zones available. Plenty of such zones available. So, इसमें और कुछ मुझे बताना चाहिए और कुछ आप समझना चाहते हैं वापस से? मैंने सिर्फ इतना कहा है कि जो रेंज है इस कैंडल की, ग्रीन कैंडल की और इस रेड कैंडल की, ये रेंज जो है ये बीच वाली कैंडल की रेंज से बड़ी है. तो जो कि ये बड़ी रेंज है, तो मैं इसको बोल सकता हूं कि ये एक बेस कैंडल है और एक या फिर एक कंसोलिडेशन कैंडल है, क्योंकि मैं इसको तीनों कैंडल को साथ में देख के ये बोल रहा हूं. ठीक है, तो इस वजह से मैं इसे बोल सकता हूं कि ठीक है, यहाँ से सेलिंग स्टार्ट हुई है, तो जब प्राइस वापस से दोबारा इस एरिया में एंटर करेगा तो वहां पे कुछ रुकेगा वो, या फिर वहां पे कुछ लोग बेच सकते हैं इस इंडेक्स को या इस स्टॉक को, और वहां से मुझे एक ट्रेडिंग अपॉर्चुनिटी मिल सकती है. मैं वहां पे एक फ्रेश पोजीशन ले सकता हूं. सिर्फ इतना ही मैं इससे ये बताना चाहता हूं. तो ये जो गाइडलाइन है, जो कि ये बॉडी जो अपन कैलकुलेट करते हैं, बॉडी कैलकुलेट होती है कैंडल को ओपन और क्लोज माइनस करके आपस में उसका डिफरेंस लेके, और जब हम उसे कंपेयर करते हैं कैंडल की रेंज के साथ में, दैट इज हाई माइनस लो, तो जब वो पता चलता है कि हाँ वो 55% उससे कम या उसके बराबर है, 55% से कम या उसके बराबर, तो हम उसे बोलते हैं कि ठीक है, अब वो कंसोलिडेशन कैंडल है हमारे लिए. और वहां से या तो इस केस में सेलिंग आई है, और इसका जस्ट उल्टा अगर मैं बोलूं तो वहां से बाइंग आ सकती है जब प्राइस दोबारा वहां पे आएगा. तो मुझे मैं जब अपनी ट्रेडिंग स्टार्ट करूंगा, जब मुझे इस तरह के जोन्स को पता लगाना है, तो मुझे क्लियरली कंसोलिडेशन कैंडल का पता होना चाहिए कि वो कहाँ है चार्ट पे. ठीक है, तो मुझे कोई इंडिकेटर यूज नहीं करना है, मुझे अपनी आईज को ट्रेन करना है कि मैं जस्ट देख के चार्ट को ये बोल सकूं कि वो एक कंसोलिडेशन कैंडल है या नहीं। तो पहले तो मुझे प्रैक्टिस लगेगी और इसीलिए मैंने वो आपको फॉर्मूला दिया है। राइट, सो इसको कैलकुलेट कैसे करेंगे? We are going to have 4 data sets for that candle: open, close, high and low, right? So how to calculate the proportion of body with respect to the range of the candlestick? So open and close are like this. So that makes it the body of the candle. So if I want to find out the range of the body, that is the body itself, then that is the open minus close taken in absolute term. एब्सोल्यूट टर्म मतलब उसका ये कहने का मतलब है कि जो भी दोनों में से हाई है उसको माइनस कर दो जो भी दोनों में से लो है उससे। तो अगर मैं 373.05 को माइनस करता हूँ 375.45 तो मुझे मिलता है 2.4। एज सच मुझे मिलेगा -2.4, पर उसको जब मैं एब्सोल्यूट टर्म्स में कंसिडर कर रहा हूँ तो मुझे मिलेगा जस्ट 2.4। मुझे माइनस आता है कि प्लस आता है उससे कोई मतलब नहीं है, मुझे जस्ट डिफरेंस पता करना है उसका। Then what I'll do is I'll try to find out the range of the candle, that is high minus low. Now low in this case is actually equal to the open. Now whatever the case may be, I'm going to take the difference between high and low. Okay, that is going to provide me the range of the candle. So range of the candle is 378.8 minus 373.05. So what I'm going to get is 5.75. Right. I'm going to get 5.75. So I've already got the body of the candle, the range of the candle. So what I'm going to do is I have to take the body and divide it by the range of the candle and multiply that by 100 because I want to find out the percentage. So in this case, it is actually 41.74. Now tell me, is it less than or equal to 55%? The body, when I'm comparing that with respect to the candle's range, it is less, right? So since it is less, what can I say about this candle? What kind of a candle is this one? Just an ordinary candle or a special one? It is a consolidation candle, right? So I need this baseline to actually identify when I'm beginning my trading journey, when I'm beginning to identify key levels, I need to understand how it is appearing, where it is appearing. And that is why I've given you this mathematical formula. Later on, when you have sufficiently practiced this, I'll strictly advise against using this formula. Just train your eyes to identify such consolidation areas. All right. So if open, close, high, low, all are same. All are, they are never going to be same. It will look like a hyphen. Okay. So in that case, I'll call it is very rare. You are going to have this kind of a thing only on 1 minute chart, probably in scripts which are not that liquid. So if the script is not liquid, I'm not going to have any zone clearly, and therefore I'm not going to trade it. I'll not call that a demand zone or a supply zone like that, but I'll not trade there simply. It can be a Z category share, or it can be even a B category share. It can sometimes be even A category share. Okay, if you are trading it on a very low time frame, let's say 1 minute or 2 minutes, it is a possibility that you can have this kind of a move. So price is not moving at all. If it is not moving at all, how will I profit from it? Okay. So you avoid trading in such scripts where you don't have very clear zones. So just a brief of what is going to be coming in the next session. Okay, just a brief of that. the momentum candles is where you have expanded range candles with very big bodies, and then you have the consolidation candles or the indecision candles. That is where you have the body of the candle, when it is compared with the range of the candle, it is less than or equal to 55%. So that is your base or indecision candle, and then on the other side you have momentum candles. So between two momentum candles, if you have a base, you have a zone. Okay, now what is a zone? We are going to cover in the next session. So that is just a prelude to that. Now there are some advanced candlestick patterns too, which will be discussed in later part of this program. Okay, so that brings us towards the end of the session. So you need to identify 10 bullish, bearish and neutral candlesticks each that we have discussed today, and you need to provide 5 examples of blending of candles and study how the higher time frame candles are appearing on the lower time frame. And one more homework additionally I'm going to give you is you take up any chart, okay, any time frame, and you try to reason that price move, the order flow with the candles. You try to make notes of that, what is happening, and try to predict what may happen in future. So you provide me the order flow with candles before the future price move, and then you provide me the future price move which you got after you had predicted that. So that will give you more clarity, that will make you understand how the order flow is happening. So everyone clear with the homework part? Yes, based on the current market price. You're going to read each candle one by one, and you're going to understand like what is happening there. So let's say you have opened Nifty. So Nifty has fallen quite a bit today. So it has formed a candle like this today. Okay. Now there is some rally before that. I said the last homework, which is not mentioned here in the slide, is you take up any chart, you open any chart, any time frame. Okay, there will be a set of candles. Take the latest candles, and then what you do is, especially you do it on the intraday time frame, so that by the time you submit the homework, you have actually the past price action and the future price action. So what you do is you open the intraday time frame, you take the last set of candles, you try to understand like what happened candle by candle. Price moved up, so what have happened, and price moved down, so what must have happened there. And you try to understand like what may happen in future. You write your notes on the chart. That is how you are going to read the order flow with candles, just the way I have mentioned today. Okay. So that is what is expected from you. So you need to share this work with your respective mentors. You have already been given the templates in which you have to submit the homework to your respective mentors on their respective email IDs. So anyone having any query in any portion of the session? And one feedback, friends, I would like to give you. I did not enjoy today's session that much because there was very less participation from your side. Okay, so please be very, very prompt in your replies, and please don't be away from the keyboard. Please be very close to your keyboard. Make this session very interactive. Okay, yes, order flow is not so easy to understand. One entire session to be dedicated. We need order flow in continuation and reversal, and also in accumulation. Yes. Okay. So firstly, you practice that on your by your own, and then we are going to help you with that. And if required, we are going to have a separate session entirely for that. Okay. So if no one is having any query, I'll conclude today's session. Thank you so much. Good night.